Hey guys, what's happening? This is Alan from the Equity Traders. Learn to Trade Chapter 1, Video 2. What I've done is I've broken up the Learn to Trades into 15-minute segments, and I'm busy going through the Learn to Trade and adding extra value to the lessons that I've given on Learn to Trade under the Academy section, and this is Video 2. So without further ado, let's go there. Let's go and have a look. Learn to Trade Chapter 1, video part number 2. Video part number 1 you can find on the other links that I've sent. We've been through all of this. We get to how to work through these chapters. Learn to trade. You're not going to learn to trade in a day or a week or a month. So I want you to understand, how to work through these chapters. So no matter the stage of your trading experience, take the time to start Chapter 1 and work through it. Some areas you might fly through because you know them, and some areas you'll need to go through and practice. Some areas will be completely new. So take what you need, take what you have read, analyze it, and then see if you're using all the resources. Doing it right, or see if another method will work for you. For example, are you using the right resources, the right tools, and have the right broker, trading the right session, or even the right instruments? So you don't know what I'm talking about. If you're a beginner, we'll talk about the sessions, we'll talk about the instruments, we'll talk about the brokers, etc., in further trade sessions, in further lessons. Should you need more information, more explanation, just need to ask a question, then go to our contact information, communities, communicate with us so we can assist you. If you look at the bottom of my website, send me a text and I'll respond as soon as possible. So you can communicate with me directly, you can send me an email, you can go to various ways of talking to me. So how to work through these chapters. The time frame consideration. Please understand that you won't be a professional trader in a week, a month, but maybe a year or 3. It is unlikely that you will become a millionaire in your first year. If you are, let me know your trading strategy. Practice makes perfect, and this could take time to perfect. So what am I meaning by practice makes perfect? What I mean is there's back testing. So what you'll do is you'll go and trade, you'll pick up a trading strategy, and you go and you back test it. Go back a year, go back a month, go back 3 months. Go and test by back testing your strategy. You go back into the time frames, you go back and you stick to your rules and regulations that you have set up for your trading session, and you back test it and make sure that your trading session works. And and you keep a journal, and what you do is you trade, and in a week you say how many profitable trades, how many losses, how many trades were won, how many were lost, and then you'll see if you are getting 80% of your trades as winners, then you have the right trading strategy. If not, you need to change your rules, you need to change your strategy. So what's a day trading success rate? So this is very important for you to understand. Some interesting stats I found on the internet, not proven but stated, not to open your eyes a little in terms of decision of yours to become a trader. In fact, this is almost motivation to open a brokerage. So 80% of all day traders quit within the first 2 years. Let me say that again. 80% of all day traders quit within the first 2 years. Why? Because they didn't make $1 million. Among all the day traders, nearly 40% of day traders for only 1 month. So among all day traders, nearly 40% day trade for only 1 month. Within 3 years, only 13% continue to day trade. After 5 years, only 7% remain. So are you going to be one of those 7%ers? Traders will sell winners at 50% higher than losers. 60% of sales are winners, while 40% of sales are losers. The average individual investor underperforms a market index by 1.5% per year. Active traders underperform by 6.5% annually. Not good stats, guys. Really not good stats. Day traders with strong past performance go on to earn strong returns in the future, though only 1% of all day traders are able to predictably profit net of fees we will discuss the fees that the brokerage has, and you'll understand that trading is a business. Traders with up to 10 years negative track record continue to trade. This suggests that the day traders even continue to trade when they receive a negative signal regarding their ability. So what does that mean? That means you're not going to win every trade, and if you do, you are 1 in a million. So you're going to lose when you trade. But if you have more consistent profits than losses, you'll be in that upper echelons of 20%. Profitable day traders make up a small portion of all traders, 1.6% in the average year. However, these day traders are very active, accounting for 12% of all day trading activity. Among all traders, profitable traders increase their trading more than unprofitable day traders. Poor individuals tend to spend a greater portion of their income on lottery purchases, and their demand for lottery increases with a decline in income. Investors with a large differential between the existing economic conditions and the aspiration levels hold riskier stocks in their portfolios. So we have, when I spoke to the broker, have so many traders with a drawback or negative trades, and they hold them for long because they're hoping that it'll get back into a profit. Men trade more than women. Well, yeah, and unmarried men trade more than married men. Why? Because the wife will give you trouble. Because if you're losing her money, you're going to definitely be in trouble. Poor young men who live in the urban areas and belong to specific minority groups invest more in stocks with lottery-type features. Those are scalpers. Within each income group, gamblers underperform non-gamblers. Investors tend to sell winning investments while holding on their losing investments for longer. An increase in search frequency in a specific instrument predicts higher returns in the following 2 weeks. Individual investors trade more actively when the most recent trades were successful. So what is that basically saying? That saying is if you're losing, you'll stop trading because you don't have money or because you're feeling down. But if you're positive and you keep winning and you're successful, you'll trade more. Traders don't learn about trading. Let me say that again. Traders don't learn about trading. Trading, learn to trade, is more rational or profitable than playing roulette to learn for the individual investor. So people don't learn to trade. They just scalp. They just run in with signals and hoping to goodness that they're going to win the trade. The average day trader loses money by a considerable margin after adjusting for transaction costs. Do you even know what your transaction costs are, what your business costs are? We'll cover that in later sections, but I think that because traders don't know that, they think they're making $100. In the meantime, they're only making $70 or $80 because of swap fees, because of different brokerage fees, and we'll discuss that at a later stage. Investors overweight stocks in the industry in which they are employed. Traders with a high IQ tend to hold more mutual funds and larger number of stocks, therefore benefit more from diversification effects. And we'll discuss this at a later stage. What stocks to invest in and which not. Just excuse my dog. He tends to see, people walking past or whatever, and he barks. Part of the family. Can't put a mute on him. So becoming a full-time trader. While most people who want to trade the stock market for a living would prefer not to hear this, it takes up to 2 years for anyone to become a full-time trader, if not longer. Knowledge is everything, and in the context of trading, the streets are littered with wannabe traders, and in a bull market, many are profitable through sheer luck rather than sound knowledge. So this is a very important paragraph, because we've got all these wannabe traders. Everybody wants to be a trader, and when you ask them open up a trading account, how much have they got? $50, $100, $200, but they want to be a millionaire because they've watched the video. To be a full-time trader, you need to combine a high level of knowledge with experience. Without this, your profitability probability of success over long term is very low. When you leave work to trade full-time, you no longer have the security of a regular income. This means your attention is often focused on making profits from every trade to pay the bills. So before you leave your full-time job, you must be a consistent, profitable trader, because that's where your income is going to come from. You can't be stressing to say, well, I have to make this trade, I have to win, I have to profit, otherwise I'm not going to make it. This need for survival often results in the trader trade more to make up for any trading losses, or because they are unable to meet their day-to-day financial needs. Consequently, a spiral of increased pressure begins, resulting in the trader becoming higher risk to get back on top. Unfortunately, because of their lack of knowledge and experience, they may end up back at work. How many traders have left their jobs, resigned, decided they're going to become full-time traders, they're gurus, they know everything, they've got a trade signal coming through hourly and they're going to just win it, they don't need to work. Open your eyes, my friend. Keep your job. Being a full-time trader does not mean you work every day. It simply means that your trading is paying for your lifestyle. This is a very important distinction, and one is recommended to ponder. If your goal is to trade full-time, trading is about creating a lifestyle, not making it your lifestyle. Hence, if your goal is to replace your income of $100,000 a year, which not many Americans earn or South Africans earn, it does not mean you have to make around It does not mean you have to make around $2,000 a week from trading. It just means your total trading profit over 1 year needs to equate to $100,000. Looking at this like that, rather than the micro viewing of generating $2,000 a week, will make a dramatic difference to your trading psychology and how you trade the market. So let me simplify this. So you want to earn $1 million a year. $1 million a year will be like almost 100,000 a year. And it doesn't mean that you must take 100,000 divided by 12 and that is your monthly target, yes. But if you can make 2,000 in week 1, 1,000 in week 2, and week 3,000, and then you basically got to make sure that your trading meets your targets so that you can effectively, in a period of a year, make that kind of money. We'll go and discuss the odds of day trading a success in the next video. Keep in touch.